Hello and welcome back to TT community. So congratulations, the course content is almost done. So we're going to discuss in this video how we enter the market. So I'm going to show you the entry types like in the text document. And after this section, we will have some putting it all together videos, which means I will show you how we analyze the market from section 1 to the last section, the entries. So we add market structure, price range, imbalances, zones, liquidity concepts, and then you're going to see how we read the market. And this is for me really an incredible strategy. So let's start with the entry types. Okay. Like in the text document, we have different entry types. So it's designed for everyone out there. So you have a job, you're working exactly at session times, no worries. We have entry type for that. You're sitting in front of the charts and you want this adrenaline, okay? So then we have even for the lower time frame stuff an entry type. No worries, we have it here. If you want to get in the trade, get out during a day, or let's say maximum you want to hold it one day, we have even strategies for that. So let's start with some scenarios with the first entry type, which is an aggressive style of trading. And I will show you on diagrams a bullish and the bearish scenario. So once we have a bullish market, prices making higher highs and higher lows, right? So let me just change the color real quick to our beautiful academy color. Perfect. So what we have right now is a bullish market. We have a nice break of structure. And discounted level, we have a demand zone. So you know already how to draw demand zones and supply zones. We showed it in the text document and we talked about it in the videos. So as you can see, the aggressive entry type is setting a limit at the demand zone, top of the demand zone, stop loss a little bit below the demand zone. And if the market comes in, you're automatically in the trade. So market is pulling back. Once it hits this level, you're in the trade. If it moves up, you have the profits. If it moves down, you get stopped out. Simple. Top of the zone, buy limit, or just live execution with pressing the buy when it comes there. That's a first entry type, top of the demand zone. Okay, not sure. Perfect. Now we move to a bearish example. So the market made a break of structure, the downside. We have our supply level up here, and the aggressive style is bottom of the zone, sell limit, and the SL a little bit above the zone, give it a little bit of breathing room. And then when the market comes back, either way, you're going to win or you will lose. That's simple, right? So this trading type, this entry type, entry style, is more likely for people who really have less time during the day, during the sessions, to execute manually, okay? So you're sitting in a job or you have something to do in your business, whatever. You can set alerts, or you can just press a sell limit and a buy limit. And when it comes there, it moves in your direction, or you will collect stop loss. So that's the entry type number one. Number two is a bearish example. Again, break of structure, supply zone. So let me just highlight it. Perfect. So the second entry type is called 50% of the zone, which means you can take your Fibonacci and put it on your zone and refine it just to the 50% so that you can remove the fib and set your limit at 50% of the zone and SL again a little bit above the supply level. So when the market comes back up, it triggers you, you can make profits, or you're going to lose a trade. Simple as that. So in a bullish example, same thing. Break of structure, demand zone, 50% of the demand zone. Now refine it back to 50, remove the Fibonacci, take our long tool, press it there, SL a little bit below, and if you want to know how many pips below or above, nobody knows, okay? Backtest your favorite currency pair, and you're gonna see how often it liquidates with 5 pips, 10 pips, 15 pips. There is a range between numbers, so you can see the best briefing room for yourself, okay? So that's now the 50%. When the market comes back down, your entry gets triggered. Either way, you're gonna win or you're gonna lose this trade. These two are completely easy and simple to understand. And the third style is a conservative one, okay? It's called the confirmation entry. So when we have a bearish scenario, again, a break of structure, supply zone, and the market is pulling back up. So it hits your supply level. Let's say this is 4 hour H4 zone, okay? Now we go back to 30-minute or 15-minute, and we wait for the 15-minute break of structure. So, which means when the 15 minutes shows us this scenario takes out the low, we automatically create another supply on the 15-minute where we can trade from, okay? So this 15-minute scenario, we have a break of structure to the downside, and then we have a supply level here on the 15-minute or 30 minutes, doesn't matter, both are good for H4, and then you can execute from here. So what's the advantage or what are the benefits of a confirmation entry? Confirmation entry is, like I said, a conservative style of trading, which means when the market comes to a higher time frame zone, you want to wait and see what price delivers, okay? And if the price loses momentum and then breaks structure to the downside, like on the bearish scenario, on the lower time frames, you can mark up your lower time frame supply and then take the trade from the lower time frame supply level. So then it will look like that. You have your zone and sell a little bit above the zone and set your target. So you don't need to trade like that because that's your confirmation. Confirmation entries will give you more risk to reward because you're executing on lower time frames, and lower time frames have automatically, most of the time, smaller zones, okay? So this is the bearish scenario. Now take out your pen and write down this important thing. If you have a monthly zone, your confirmation you're going to see is most likely on daily time frame. If you have a weekly zone, you can use H4 for confirmations. If you have a daily zone, you can use H1 as confirmations. If you have a H4 zone, you can use 30 minutes or 15 minutes. If you have H1, you can use 15 minutes or 5 minutes. And if you have a 15-minute zone, you can use 1 minute or 15 seconds. Okay. But this is what we're going to skip now. This is really another story. But these are the time frame combinations. So if this would be a monthly zone and you see this on daily, it's ready for a daily trade. Okay. So now we take a bullish example. Market is making a higher high. We have again a break of structure. We have our demand level. So this is 4-hour demand. Okay, H4, like on the Paris scenario. So we have 15-minute execution time frame or 30 minutes. Price is coming in, gives us this break of structure to the upside. So we have automatically here a lower time frame demand level. So we'll execute from here, SL below, set the target. Once the market comes back, so once the market comes back, you're in the trade. Either way, it moves you to the direction or hits you out in stop loss. So this is, like I said, the conservative way of trading. And for sure, if you're sitting in front of a computer, this one is the best style of taking a trade. So you're executing manually. You're sitting here, you're waiting for this to happen. If you have a demand, then switch back to lower time frame to wait for the break of structure. If this happens, you're ready to press the button. If not, there is no trade yet. Okay, so simple as that. These are all like passions factors. So passions is really very, very important in trading. It's not just in swing trading, it's even on day trading. Just be patient. Trust me, this is a huge skill in the forex world. So now we have in the confirmation type, we have an entry with liquidity. Okay, so which means when the market is going down, this is my zone. I want to get the price to this level before taking a trade, right? So the price is pulling back. Suddenly it stops here and just consolidates. Okay. So what does it mean? Just think of the previous section. We discussed about liquidity concepts, right? So what do we have automatically here is liquidity. And we have the same on the bottom side, right? So if this happens below our supply level, just be patient, wait, because these are most likely textbook scenarios. If a liquidity engineering happens below your supply level, because most of the time what we will see is this to grab these highs, okay, fill our imbalance, mitigate the supply zone, and from here we're going to see this, okay, most likely. I mean, I will show you even on the next videos candlestick charts, so you will see this scenario very often. Okay, so don't rush in any process. Just wait for price to fill your price level, because once you backtest, you do the same, right? You mark up your supply, you mark up the demand, You wait until the market gets there. So, and if you have liquidity below, sitting, just wait. Or take out of the liquidity and come back to our supply level so we can enter our beautiful trade. So, another thing what we have is the fake shifts in structure. So, which means pull back on a lower time frame. Okay, so moving up, higher high, higher low, higher high, higher low. Then we have this, and a break of this substructure. What do we can see here? Okay, so my bad. So what do we can see here is a double top, right? What is a double top? An equal high. What is an equal high? It's liquidity. So once we have liquidity and we have the shift here on the lower time frame, like I told you, like on the confirmation entry, this should be a supply and then we enter, right? Not most of the time, because once liquidity is sitting here, there is a high probability to take out the liquidity, which means once you get in here, mark up in the supply levels and lower time frame, your SL is above, you're going to get stopped out. Then it comes to our level and then it drops massively. So, and like I said in the liquidity concepts video, you should beat the liquidity, okay? And if you don't watch out, you will beat the liquidity. So, and if you are the liquidity, you're going to lose money, okay? That's a very, very important factor. And that's what I'm saying. Passions, 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 passions. Just wait and follow your plan, okay? And the same example on the bullish side of the market, we have a higher high. So let's say this is daily demand. So we move back on 1 hour, okay? Price didn't hit my daily demand yet and starts to give us a triple bottom and then a break of structure on 1 hour. So is this now my confirmation here? Most likely not. Why? Because we have equal lows sitting here. So this means the market most likely will stop out these this liquidity and these buy orders. Once it breaks this triple bottom, sell stops will get triggered, demand is getting filled, and then we move higher, okay? So these are really very, very important key factors. I know right now it's diagrams. On diagrams, it looks always easy. So because you don't need to identify anything. But trust me, once you check the charts often, you're going to see it like that. So it is really like, how can I say, it's not like a game, but it's really very simple. In trading, the vast majority is losing, most likely because of mental lack of discipline, lack of mental strength, psychology, emotions, so no control of emotions. Most likely there is no emotionless people, okay? It's more likely the successful people can control their emotions. And on this section, we will we will talk in the future more about psychology, emotions, tips, how you can control them. But here, only thing what you need is passions. And like I said before, don't be the liquidity. Because if you are the liquidity, you're losing the money, okay? So this is, for now, that's all with diagrams. On the next videos, we're going to even discuss all entry types on candlestick charts. I hope you enjoyed this video, and I hope you wrote down some key factors, even the time frame combinations. Okay, these are very, very important. And yeah, keep grinding, keep hustling, and see you in the next video.